The Bank Indonesia decision is, I would argue, probably close, but our view is that they will. Bank Indonesia has shown a lot more preference, in my opinion, rightly so, towards the need to maintain currency stability as against immediately trying to provide more stimulus through easier policy. They've already injected a lot of liquidity. They continue to do so via their purchases of government bonds. It's not obvious to me that lowering the price of liquidity at this stage has necessarily more benefits than the potential costs to what weaker currency could entail for BI. So I think BI would probably hold on rates. The risk, of course, does remain that they are also, like a lot of other central banks, tempted into cutting to try and narrow the what is clearly a large negative output gap for most economies.
Interesting. In terms of watching the EM space, I've got to get your thoughts on the Chinese yuan here, because speaking of push and pull factors, I mean, a lot of different things taking place. Tensions with the US and China seem to be front and center right now, perhaps a source of further weakness for the Chinese currency. But then you've got expectations for additional stimulus at the NPC. Data on property prices were fairly encouraging today as well. What's your call for the yuan?
So I think for the renminbi, I would argue that as far as the pure economic policy consideration is concerned, I would hold that history suggests the Chinese policymaking typically tries to favor leaning against any volatility in the currency and keeping the currency as a firm anchor. I go back again to the point that having a weaker currency is not necessarily more of an advantage by way of price competitiveness at this stage when you're facing an income demand shock, as against obviously the disadvantages which come from possibly engendering even more expectations of weaker currency. Now, the US-China tensions and the escalation is a separate dynamic, which has obviously entered over the last few days, and which certainly is starting to get noisier, something which we will have to watch for carefully. I think at this stage, the market is still trading one with relatively low delta, that this becomes away from non-tariff action into a tariff price action, but something we have to watch for carefully. I think if the renminbi continues to weaken and potentially towards the 720 levels, then we are clearly seeing the market pricing in more probability that we slip back into some form of sort of trade war kind of tensions. Not our baseline. We think this will not evolve into a tariff war again, but something to watch for carefully.